Have you noticed how quickly the words FATF Grey List can change the way banks or crypto firms treat a country? One month business feels normal, the next, cross-border payments stall, accounts are closed, and compliance cost skyrockets, all because of these three words, FATF Grey List. So why does this list matter so much, and what exactly does it mean for banks, fintech, and compliance team like yours? That's what we will break into in this video today. I'm Marco, I've spent the last 20 years in financial crime prevention, and today I'll explain how global AML standards shape the work that we do every day. If you want clear, practical insight into regulatory compliance, make sure you hit the subscribe and ring the bell so you don't miss new video. And now let's jump into today's video. By the end of this video, you will understand what the FATF Grey List really means in practice, how it impacts banks, crypto firms, and compliance operations, real examples of countries that have been affected, and what you as a compliance professional should actually do when a country lands on the Grey List. The Grey List, officially called Jurisdiction Under Increased Monitoring, highlights countries with strategic deficiencies in their AML CDF regimes. It's not as severe as the blacklist, but the signal is clear. The country has weaknesses and the international community is watching. You don't need the whole FATF process here because I've covered it already in another video and you will find it up here. Today, we are focusing on what happens after a country is placed on the Grey List. For banks, the FATF Grey List means increased correspondent banking scrutiny, so international partners often demand more documentation or even limit exposure. Higher compliance costs, enhanced due diligence on client or transactions that are linked to their country. Reputational risk, global rating agencies and investors take note, impacting the credit rating. An example is when South Africa was grey listed, major banks had to tighten onboarding and monitoring, leading to delays and higher operational costs. Crypto companies feel the pressure as well. Grey listing can block licensing efforts in other jurisdictions. Banks may refuse to provide accounts to crypto exchanges with exposure to grey listed countries. And regulators often demand more reporting and transaction analysis from firms with customers that are based in those jurisdictions. So this is even theoretical. When the UAE was grey listed, for example, several crypto businesses faced barriers to expanding internationally until reforms were then actually proven. If you are in compliance, the FATF Grey List should trigger immediate changes. For example, adjust risk scoring models. Customer transactions or counterparties from listed countries should move into higher risk categories. The review of onboarding flows, enhanced due diligence steps like source of funds, beneficial ownership checks, and etc. becomes mandatory. Strengthen the ongoing monitoring as well, for example, higher threshold for transaction review and more frequent reviews of high-risk clients. So the Grey List isn't just about governments, it lands directly on your desk as a compliance officer, and this is where practical knowledge makes all the difference. And in my FinCrime Career Accelerator course, I cover exactly how to apply global standard like FATF in your daily work. Not just theory, but real-world steps that you can take to stand out in compliance role. The 2.0 version of my course is now available with over 50 new inputs from other students that completed already this course in 2025. So find the link in the video description if you want to find out more. Let's look at a few recent examples. UAE entered the Grey List in 2022 and exited in 2024 after major reforms in financial intelligence unit reporting and enforcement. South Africa, grey listed in 2023, still working on reforms which has made cross-border financing more expensive. Turkey on the list since 2021, showing how difficult removal can be without deep systematic change. Each case shows how the grey list isn't just political, it affects real transactions, licensing and compliance work. So when you hear that a country has been added to the FATF Grey List, expect banks to raise barriers, expect crypto firms to face new licensing hurdles, and expect compliance team to spend more time on due diligence and monitoring. So we are at the end of the video, so thanks for watching. If you found this video helpful, hit the like button and share it with your team, and drop me a comment right below. Which country do you think will be the next to join or leave the Grey List, and how it will affect your work? So stay sharp, stay compliant, and I will see you in the next one.